What's up traders, Tom here with another video. Today we will be discussing Warren Buffett's portfolio. He is possibly known as the greatest investor of all time, but in 2020 he is making some drastic changes to his portfolio. Did you now know that he has 68% of his portfolio in just 4 stocks? Stay tuned. So, as we all know, Warren Buffett is well known as being one of the best investors ever. Over the previous decades, his results have spoken for themselves. Berkshire Hathaway is Warren Buffett's main investment tool, but he also owns shares on the stock market. So in terms of returns, his overall company has returned a crazy figure of 2,404,748% since inception. He has also returned an average of 20.9% per year compound annual gain. And these are phenomenal figures when you consider his returns versus the S&P 500 as a whole. As we can see, Warren Buffett particularly did amazingly between 75 up to the tech boom. And while he has still improved over time, he has had to make changes and is now making significant changes to his portfolio that we'll discuss further in this video. So many people know the origin. We're not going to go into that today. We're going to go into purely his stocks and talk about his plans for the future and why he's reducing some stocks and adding to others. Remember, if you agree with the policy of no FOMO when it comes to investments, then you should subscribe and hit that bell for more content covering the financial markets. Also, I'd like to just remind everybody that we have a free public trading Discord channel that people are able to join, and it's a great place to share your ideas with other members of the trading community. We encourage you to click the links down below and join the community today, which is growing at a great pace, which is perfect to see. So let's begin today by talking about Warren Buffett's largest holdings and why he bought these stocks. So firstly, Apple. It's amazing to see that he now owns, as percentage of his $196 billion portfolio as of the May 21st, 2020, he holds 41% Apple holdings. And that equates for over 6% of the total shares in Apple. So Warren Buffett is a big fan of Apple. In fact, he believes that it's better to buy a great company at a fair price than a fair company at a great price. And he definitely thinks Apple is one of the best companies he's ever owned. And it's not hard to see after it's returned him over 200% in the last couple of years he's owned it. The second biggest holding Warren Buffett has is his holding in Bank of America. And Bank of America and Warren Buffett have had a storied past. In 2008, Warren Buffett literally saved Bank of America to a degree by investing $5 billion in preference shares, and he's got a big storied past with that particular company. The reason Buffett loves Bank of America so much is that they've been involved in some pretty big initiatives in terms of capital return programs, and Buffett loves earning money off his shares. So his shares have given him a huge amount of payback, and in June 2018, Bank of America basically announced a $26 billion capital return program, which was then followed in June 2019 by a $37 billion capital return initiative. So he's a big fan of those kind of programs and earning money from his holdings. The next biggest holding is one that Warren Buffett literally has said he will never sell in his lifetime, and that's Coca-Cola. During his annual addresses, you always see him sipping from a Coke, and it's well known that he loves Coke and he loves many junk food kind of companies that he holds in Berkshire and owns outright. So this is a very well-known investment. He's owned it since 1988. And as I said, he'll never sell this particular company. But in terms of, to put in perspective of how well he's done, Coke currently sits at around $1.64 annually dividend. To put that in perspective, Since he's held this share, his yield based on the original cost basis is now 50.5% per annum. And that's what Buffett loves to see. So Coke's not going anywhere from his portfolio, and he will probably just maintain this current holding. The next holding, American Express, another one of Buffett's favorite financial companies. And the reason he loves this one so much, their ability to double dip. So that means that American Express can charge merchant fees to facilitate a credit transaction, as well as to lend to consumers and businesses via their credit cards. And of course, they've done amazingly well for him since he's owned them since 1993. So where things start to change in Warren Buffett's portfolio is his holding of Wells Fargo and his other large holding in Kraft Heinz Company. He obviously has more stocks, and we'll show you a complete list in a minute, but things are definitely changing for Buffett's portfolio in 2020, and we're going to discuss this throughout this video. So here is Warren Buffett's portfolio as of the 31st of March this year. Some of the percentages will look a little bit different, and that's because many of these companies have slightly recovered since that point. But what is most interesting is that he has sold now all of his airline stocks, and he continuously is reducing his holdings in several companies, including Goldman Sachs and Wells Fargo. As I mentioned, Goldman Sachs and also, of course, the airplane companies have been sold or completely reduced. He's also been reducing for a while now his holding in Wells Fargo and made a over 15% reduction, bring his number down. And if you look at his portfolio from a few years ago, Wells Fargo was one of Warren Buffett's largest holdings. So of course, Buffett has sold all the airlines. Why did he do this? He believes that they have changed their businesses in a very major way. In terms of his changes to things like Goldman Sachs and other investments, he's doing this for a very clear reason. So let's take a look at each one of these stocks and how they've performed and why Warren Buffett might be making these decisions. Well, I have a bit of a hunch when it comes to his portfolio, and with Goldman, he probably thinks that things have not gone back to normal as much as when you look at Bank of America. So Goldman has a history of having massive upticks and massive sell-offs. During the GFC, Goldman got obliterated, like many of the banks in America, with a strong return, but then it is pretty much over time not really performed very well. And we can see even right now, it is trading well under its pre-GFC highs over here on the left. So Warren Buffett is not too much of a fan of Goldman Sachs anymore. And this is most likely due to the changes that are happening in the monetary system. If we look at the Bank of America, Warren Buffett is well known to have invested in it during all portions of the GFC. But if we look at their steady kind of increase since that point, and we consider the capital payout programs that he likes to receive, I think he believes that Bank of America has not only got a chance of being kind of saved by the government and by the Fed, but that they have stronger prospects, in his opinion, for the longer term. So he's going to hold this particular financial. What about Wells Fargo? Well, Wells Fargo is another one similar to Goldman Sachs. It has copped a massive hammering coming into this. But similar to Goldman Sachs, it has not been making all-time highs. So if we have a look, it pretty much peaked around 2018 and was stumbling in terms of cash flow and in terms of earnings coming into this current crisis. Now, one thing about companies, if they are not doing well coming into a crisis, are they going to do better or are they going to do worse? Generally worse. And that's why when you consider what happened with Hertz and the bankruptcy the other day, that company was not doing well coming into the crisis. So I have a hunch that Buffett was already reducing his portfolio based on he did not think and did not like where the numbers were going. And of course, he will probably further reduce this part of his portfolio over time. What's the second reason, though, that Warren Buffett is reducing all of these shares in his portfolio? Well, a big part of it is when we look at what happened during the GFC and what happens when we see negative interest rates. So if we see negative interest rates, which has a high chance of happening over the next coming years due to this current crisis, we can consider Deutsche Bank. And Deutsche into the GFC was trading over $100 a share. Since then, it has absolutely slid off, and it's very difficult for banks in Europe to make nice profits and to grow. And this bank is now looking for government bailouts, and that's pretty much what they've been doing. If we consider Crédit Agricole, which I believe is in France and is another huge bank in Europe. Like HSBC, like any of these other banks that are throughout Europe, this particular bank never recovered from the GFC, and they have struggled in low interest rate environments, which is a big part of why I think Buffett is reducing his overall financials. Is he still holding insurances inside of Berkshire? Absolutely, but he is reducing his financial positions. So that brings me to my next point about Berkshire Hathaway and Warren Buffett's portfolio in general. Well, he has $137 billion of cash pile as of May 8th this year. Now, many people are going to be frustrated with this fact if you're a holder, and a few people are selling out, a few notable names are selling out of Berkshire shares because they're frustrated with the inaction that has been happening over the next couple of years. But Warren clearly thinks that there are problems in the market, and he is sitting tight with his cash for now, waiting for opportunity, which he believes will arise over time. So you might be asking, what about Berkshire? What about his other portfolio shares? Well, as I said, if you have a portfolio and over 68% of it is in 4 shares, clearly he likes holding it there. The other thing Warren Buffett has always been well known for is buying companies outright. So let's take a look at some of the big companies that he holds outright inside of Berkshire. So one of his most well-known success stories is Geico. Of course, he has made a fortune off this share, and it probably is one of his most profitable. Inside of his portfolio overall, he likes to make money predominantly from insurance companies. A lot of people talk about his candy, See's Candy. A lot of people talk about all of the businesses that he has here. But generally speaking, his favorite thing to do is to buy companies that he believes in and buy them outright at fair prices. And I would say this is what Buffett is planning on doing in the future. He always has believed owning the thing completely rather than owning the stock has been the best source of profits for him over the longer term. So thanks very much for watching the video today. If you've enjoyed it, give it a thumbs up. Of course, comment down below with your favorite company that Warren Buffett owns and whether you would be looking at ever purchasing any of the Berkshire shares. And remember to subscribe and hit that bell for more content on the financial markets. Happy trading, everybody, and we'll see you in the next video.